Good morning, friends. Today we are going to start a new topic, that is earning per share. Now, every US entities is required to disclose earnings per share on the face of the income statement, right? So, before going into earning per share, I like to show you the income statement once, right? So you can see in the screen, this is the income statement for US entities. In India, we follow non-functional. Income statement format, wherein we add all the total revenues and we add all the expenditures separately, and then we net off and get the net profit. But in case of UK, US, we always go for functional income statement. This is functional income statement, wherein you have first net sales, that is sales less return. This is we have sales less sales return. Then we have cost of goods sold, right? And from sales, if you subtract cost of goods sold, we get gross margin, right? Then we subtract operating expenses related to administrative work. So we call it as administrative expenses. We have selling related expenses. We have distribution expenses, right? So any expenditure other than related to production, will be my operating expenses. Then we have operating profit, right? From gross margin, if we subtract operating expenses, we get operating profit. Now we add other revenues and gains. Basically, these are non-operating income, that is interest received on investments, right? And we have other expenses and losses, basically interest paid, finance cost on loans and debentures issued. So we get income from continuing operations before tax, right? Less income tax. This deferred tax we will learn separately, right? In FAR, this deferred tax is covered separately, no problem. So we get income from continuing operations, right? So from sales you subtract COGS, we get gross margin. Gross margin say we subtract other expenses, other obviously business related expenditures. We get operating income. Then we have non-operating income, add non-operating expense less. So we get income from continuing operations, less income tax. We get income from continuing operations net of tax, right? Then discontinued operations we will add separately. So we get total net income. And then we add other comprehensive income, right? Other comprehensive income means basically these are unrealized in nature, unrealized gains, such as revaluation profit of a non-current asset, like your land, building, plant and machinery, right? So we get total comprehensive income. Now it is the mandatory requirement for every US entities to disclose earning per share. It needs to be disclosed on the face of the income statement. You need to disclose earning per share on the basis of income from continuing operations. We need to disclose earning per share on the basis of net income also, right? We don't have to disclose earning per share for the comprehensive income, right? And for comprehensive income, you don't need to disclose earning per share, right? So here you can see below that we are reporting income from continuing operations, income from discontinued operations, and net income per share. So earning per share needs to be reported income from continuing operations, net income, right, on the face of the income statement. This is the income statement. On that very page, we need to disclose earning per share, right? This is the rate we have earned on per share basis, right? So this is the income statement. You must have come across in your respective countries corporate accounting when you have done, right? So this is very simple. Many countries they follow a single step, means you add all the revenues, you subtract, you add then all the expenditure. and then total revenue minus total expenditure will give you net profit, right? And this is a multi-step income statement. It is also known as functional income statement. This is a functional profit and loss account, right? This type of income statement helps in ratio analysis, right? This is very important. So in this particular topic, we won't be discussing how to prepare income statement. Rather, we'll be focusing on how to calculate earning per share, right? That is our main objective. So basically in exam, they will give you income from continuing operations. They will give you our, they will give you this information. They will give you income from continuing operations, discontinued operations and net income. And this part we don't need for the purpose of earning per share. Comprehensive income we don't need for the purpose of earning per share, right? So earning per share has to be disclosed for continuing operations, net income on the face of the income statement. Now, earning per share basically is of two types. Corporations can have a simple capital structure, comprises only of common stock, and they might have complex capital structure. They might have convertible preferred stock, they might have convertible bonds, they might have share warrants, options. So these instruments effect should also be considered in earning per share. So basically it is of two types. One is the basic earning per share. This you have to calculate for every entities. And then we have diluted earning per share. This is basic earning per share. And then you have diluted earning per share. Now in this particular case, you need to see the effect of all the potential common stockholders, right? We will explain you in detail, right? So in basic earning per share, we only consider common stock which are already issued, right? We only consider this basic earning per share considers only common stock issued and outstanding, and this diluted considers common stock outstanding plus potential common stockholders, right? Okay, so let us start. So you need to first of all know, do we need to report net income per share? Yes. Do we need to report income from continuing operation per share? Yes. Do we need to report comprehensive income per share? Answer is no. In case of simple capital structure, there is only one EPS that needs to be reported, that is basic earning per share. In case of complex capital structure, which involves which comprises of convertible bonds, which comprises of convertible preferred stock, share warrants, options. So in these scenarios, we need to report one more EPS, that is diluted earning per share, right? So this diluted earning per share will consider the common stock outstanding as well as the potential common stockholders, right? So this is given in our notes. Just quickly underline. Under US GAAP, all public entities required to present earning per share on the face of income statement. So it depends, you have simple capital structure or complex capital structure. In case of simple capital structure, only common stock outstanding, you need to consider basic earning per share, and for this is potential equity shares. Potential equity shares. Currently, either they are preferred stock or debenture holders. Right? Later they will be converted into common stock. If you have discontinued operation, then you need to report income for discontinued operation per share. Now this you can report either in notes or on the face of income statement. But basic earning per share has to be reported on the face of the income statement. Comprehensive income per share and cash flow per share is not reported. This is very important. So only this part. This part is not considered. Right? Okay. I think this is absolutely fine. There is nothing much to be discussed here. Right? Let us move ahead. So first we will learn how to calculate basic earning per share. So basic earning per share basically means it is, first of all, you have to calculate profit available for equity shareholder. In India we call it as equity, in US they call it as common stockholders, same thing, right? So first of all you have to calculate profit available for equity shareholders oblique common stockholders, and then you have to divide it by weighted average number of common stock outstanding. Now usually what they will give you, they will give us this earning before interest and tax. You have operating income, you have operating profit. If you add non-operating income, you get EBIT, right? So from operating profit, if you add non-operating income, you get EBIT. Now from this particular EBIT, you subtract interest, so you get earning before tax, then you subtract tax, so you get net profit from continuing operation. Let us assume we don't have any discontinued operation. So from this net profit, usually then we give preferred stock dividend. After giving preferred stock dividend, whatever is left, that is profit available for equity shareholder. After giving preferred stock dividend, whatever is left, that is profit available for equity shareholder. So this profit belongs to the common stockholder divided by weighted average number of common stock outstanding. Now why it is weighted average? Because if there is fresh issue during the year, then we need to take proportionate common stock outstanding, right? Suppose this is the year, we are talking about 2022. 1st Jan, we had 10,000 common stock. Then 1st July, 5,000 common stock is more issued. So this 10,000 was outstanding for 12 months. So we consider 10,000 shares. But this 5,000 was outstanding for 6 months. So we consider it 2,500 shares. Right? So as a result, 12,500. This is weighted average number of common stock outstanding. Like this we do. If there is any issue during the year, you just consider the proportionate for the year, right? So this one is outstanding for full year. And this is outstanding for 6 months. So when this is outstanding for 12 months, so we take 10,000 shares, and this is outstanding for 6 months, so we take 2,500 shares. So we got weighted average number of common stock outstanding, right? So this is total profit available for common stockholder. See, we have given everyone. First of all, they will give us EBIT. From that EBIT, we paid first interest to the debenture holders. Now whatever is left, from that we have to pay first tax. Then this is the profit belongs to the shareholder. This profit purely it belongs to the shareholder. This profit is for shareholders. From that, whatever preferred stock dividend we gave, so this is for equity common stock holders, common stock, right? We paid for the preferred stock the dividend amount, and then whatever is left, that is for the common stock, divided by the number of common stock holders. So if a person is holding share for full year, so we need to consider full. If a person is holding shares for 6 months during the year, then we need to do it proportionate, right? So our effective common stock holder is 12,500. So this is profits divided by weighted average number of common stock outstanding. So we get earning per share, right? So we do a lot of examples based on this, and then accordingly things will get clear to us, right? See, clearing this exam is very easy. After our discussion is done, you need to simply practice, because without much practice, you won't be able to get the questions correct, or you won't be able to give a positive approach towards the problem if you don't practice, right? There are a lot of questions which are there in our content, so you can practice from there, okay? Obviously, we will be having few practice sessions as well, wherein we will be solving quite a handy number of questions, but you need to practice on your own as well, right? Go to a problem, see the hints, see the comments that are given, so accordingly you can learn from that, right? Okay. Now this weighted average number of common stock outstanding, I have told you. See, this earning per share calculation is very simple. Now you need to note one thing: when you give preferred stock dividend, if it is non-cumulative, only if it is declared, then only you will subtract. Because non-cumulative we only distribute when it is declared, right? And in case of cumulative, even if it is not declared, then it is in arrear, because when you give a dividend for future years, then you have to pay first the arrear. As we have already discussed in stockholders equity, there are different types of preferred stock. We have participating, cumulative, non-cumulative, right? So the non-cumulative dividend will only be subtracted if it is declared, and in case of cumulative, even if it is not declared, still we are going to subtract it from the net profit for calculating earning per share, right? When we are doing accounting, only subtract, right? When we do accounting, when we do actual accounting, right? When we do accounting, we only subtract when it is declared, right? But in case of earning per share calculation, from the profit available for equity shareholder, right? When we do actual accounting, only subtract if declared. But as far as EPS calculation is concerned, right, for non-cumulative only if declared, but for cumulative, even if it is not declared, still we are going to subtract, right? So that this is what we have to say from the purpose part. This is the numerator part, right? This is numerator. Now we will be focusing on the denominator part. This is denominator, right? Now if you have any stock sold, means issued, reacquired means buyback, oblique repurchased but not yet retired, that's treasury stock. So when you have any further common stock issued, we need to consider it separately. And when we have any stock repurchase, including the treasury stock, right? So we need to subtract accordingly, right? Because those were not outstanding for the full year, right? So this is the opening common stock. This is issued category. This is fresh issue, right? Now this is buyback. Now these two are very important. Retroactively adjusted means from the beginning of year. mean these will not be considered on a time weighted basis, right? Not on a time weighted basis. Same for this, for full year. So if you have given any stock dividend, means bonus shares, we have done it in stockholders equity, right? Stock split, reverse stock split. Reverse stock split is basically consolidation. So these things needs to be considered retroactively, that is from the beginning of the year, right? No, not on a time weighted basis. So we get weighted average number of common shares outstanding. In short, we call it as WACSO. Right. So now what we'll be doing a lot of examples related to this basic earning per share, and then accordingly we'll move ahead with for the diluted earning per share part, right? And that is for the complex capital structure. We are doing it right now for those US entities which have only common stock outstanding, no other instrument, right? Even if they have instrument, simple debenture, simple preferred stock, not complex, no convertible preferred stock, no convertible debenture, right? Simple. Okay. Chalo. Now the stock dividend, stock split, I have already told you it should be considered from the beginning of the year, right? Now retroactively means for prior period also we will adjust. This I will explain you separately, no problem. I'll show you one example why we need to do it for prior period also, because many investors they might feel sad by seeing earning per share depleting, right? Now if it is so the stock dividend and stock split should be considered from the beginning of the year, and if prior periods are presented, then effect of stock dividend must be retroactively adjusted for those period as well, right? Now there is one example, simple example, let us do. Now we can calculate this weighted average on in two ways, right? We can do calculations in two ways, right? So initially the share outstanding was 1 lakh, and then we had done stock split, so sorry, 10 lakh, so another 10 lakh is given, right? So in case of stock split, the number of share increases, however the total equity remains the same. So we have already explained you, in case of stock split, this is subdivision. In India we call it as subdivision of shares. Number of common stock increases, right? Number of common stock increases, however total equity remains the same. In case of reverse stock split, number of common stock decreases and total equity remains same. Then we have additional shares. This is March. It is in month, day, year format. In India we have day, month, year, but it is month, day and year. This is April and this is December. Statement showing calculation of common stock outstanding. So the January opening shares, these were 10 lakh shares, these were outstanding for full year, right? Then March 31st, we have stock split, another 10 lakh. This will be considered retroactively. Then we have fresh issue. Now fresh issue is 30 lakhs. Just let me just check. This is 30 lakh. So this is outstanding for 9 months. So we'll take 22 lakh 50,000. Then we have treasury stock or whatever buyback, 5 lakh. Now this is not outstanding for 1 month because till December it was outstanding. So we are going to subtract 1 month. This is 41667. Opening was outstanding for full year. Stock split, stock dividend, reverse stock split retroactively, full year from the beginning. Fresh issue on a time weighted basis. If it is issued in April, so April is outstanding, May, June, July, August, September, October, November, December. It's outstanding for 9 months. The shares which are reacquired, that is outstanding for only 11 months. So we subtracted 1 month effectively, because whatever share that has been reacquired, it has to be from this category. Right? So we have accordingly considered this. So 1 month it is not outstanding, so subtract it. Right? Just do the calculation part. This is 42 lakh 50. So we get 42 lakh 08333. Right? This is one way of doing it. Another way to do is just draw the timeline once. Opening is 10 lakh. Then March 31st. This is 1st January. Then March 31st. Again it is 10 lakh. Then April it is 3 lakh, 30 lakhs, and then December it is repurchased. Now first of all, this will be considered right from the beginning. So 20 lakh is outstanding for 3 months, plus on this date the total number of share has become 50 lakh. This stock dividend will be considered right from the beginning, right? This date is not relevant, it will be considered from the beginning. So 10 lakh was common stock, another 10 lakh. So 20 lakh is outstanding for 3 months. Now on April, it is changing to 5 lakh. Sorry, on April it is becoming 50 lakh. So on this 50 lakh, this is outstanding for April, May, June, July, August, September, October, November. So 1, 2, 3, 4, 5, 6, 7, 8. So this is outstanding for 8 months, and minus 5, it comes to again 45 lakh. So 45 lakh was outstanding for 1 month. Out here, we are considering every issue or every reacquired shares separately on a time weighted basis. But out here, every time the stock position is changing, we are again calculating the common stock outstanding, and accordingly we are moving ahead. So this is 3 by 12 is 5 lakh. This is roughly 33 lakh, 33,333, and this one is so this is 4 lakh 45 lakh divided by 12. So this is 3 lakh 75,000. So we got 42 lakh 8,333. You get the same answer, right? You will get the same answer, no need to worry about that, but the ways of doing things are different. Out here, every activity is being considered separately, and time weighted basis, time weighted is done. We considered it separately, we are considering it separately, we are considering it separately. But in this case, whenever there is any movement in common stock, the equity, we are calculating fresh outstanding and till the next transaction date, right? So usually it is better to go by this way. This is more easy to use. Okay, let us move ahead. Again, we are here to calculate the denominator, right? One more question on denominator part. January 2022, 10,000 common stock is outstanding, and then March additional 6,000 stock is issued, no problem. Then there is a stock dividend of 10%, fine enough, resulting in 1,600 stock. Okay, and then September, we repurchased 300 stock as treasury, and then December X executed stock split. We had 29,200 outstanding at the end of December. Now this outstanding is not relevant out here. This is actual outstanding they are given, but we need to consider the weighted average. So this particular number is not relevant for us. Don't get confused with this. Right? Let me just first draw the diagram once, and then accordingly we will move ahead. So January we have 10,000 common stock outstanding. Then March we issued 6,000. Then August 1,600. As of now, the number of share outstanding was 16,000. 10% of that is 1,600 is the bonus shares, right? And then September is 3,000 repurchased, and then December we have stock split. So till now, what is the number of common stock outstanding? It is 10,000 plus 6,000 plus 1,600 minus 3,000. So we have 14,600. Here it is stock split. So 2:1 means just the double. So 14,600 into 2. So that's 29,200. So this is not relevant for us. We need to consider things on a time weighted basis, right? We need to consider things on a time weighted basis, and accordingly we will consider it for full year. Okay. So this will be considered for 12 months, right? This is 12 month. This is 10 months because this is beginning of March, so March will be included. Now whatever is the weighted number total here, on that 10% will be bonus, that will be for full year. And this is not outstanding for 4 months, September, October, November, December. And then whatever is the subtotal on that, just multiply with 2 for full year. So this is not relevant. So what do we need to do? First we need to consider it for 12 months, 12 by 12, okay. This is 10 by 12. Now what is the weighted average number? 15,000. 10% of this, and it will be for 12 months into 12 by 12. So it will be 1500 only. Till now what is the weighted average number? 15,000. For EPS calculation, we don't need to consider the number of share outstanding. We need to consider weighted average. So as of now, forget about everything. Forget about repurchase, forget about stock split, forget about bonus. Let us forget about bonus. If we have only these two, opening and additional stock issued. So what will be the weighted average? Weighted average will be 15,000. Yes or no? Weighted average common stock outstanding will be 15,000. So on this 10% is stock dividend 1500 on the basis of weighted average, and this needs to be considered for full year. Is it fine, everyone? Okay. Now treasury stock is not outstanding for 12 months. Sorry, 4 months. So again, if you don't have any stock split, then this is the weighted average number. This is before stock split. Stock split 2:1 means again equal number of shares. Equal number of shares. And this will be considered for full year. So instead of multiplying with 2, I can do here 15,500. So anyway, I'll get 31,000. Since additional shares are time weighted, its bonus should also be time weighted. So we can write stock dividend and stock split should be calculated on the basis of weighted average common stock outstanding, but for full year. This is very important. Actual stock dividend, stock split not considered. Okay. I guess this is absolutely fine. Okay, now let us do one example on earning per share. First January, common stock outstanding 10,000 shares. April 1, 10% preferred stock outstanding. So on 1st January, we have 10,000 shares, par value $10. Common stock issued 10,000 shares. During the year, company earned a net profit of $25,000. Right. So our question is calculate earning per share. So case 1, assume preferred stock is non-cumulative. Net profit is $25,000 less. Preferred stock dividend is nil because they haven't said that it's declared. For non-cumulative, they have to mention separately that we have declared preferred stock dividend. Right? Weighted average common stock outstanding 10,000 is for 12 months. Only common stock outstanding, no preferred. Then another 10,000 is for 9 months. Basic earning per share is equals to right. This is very simple. If preferred stock is cumulative, even if they don't mention, see the number of preferred stock is not relevant because we are not going to consider it for weighted average common stock outstanding. It's common stock outstanding, not total share outstanding. Preference dividend we are going to subtract. I think this is absolutely fine. Okay. Now I told you that I'll explain you later on. There is one very important concept that in case of stock dividend, if prior period is presented, then effect of stock dividend should be adjusted for those periods. Now, why is it so? So, in case of preferred, even if not declared, subtract. Okay. Now, this is 2021. This is 2022. Okay. So 10,000 common stock outstanding is 10,000 shares. Okay. Profit is $25,000. Let us assume both the years the profit is same. Okay. Now here 10,000 stock dividend we have given. Now when you are calculating BEPS for 2021, so you are going to do 25,000 by 10,000 shares, that comes to $2.5 per share. Now when you do for BEPS 2022, it is 25,000 by, because its effect will be considered for 12 months, it will be assumed right from the very beginning. So accordingly this will change. So as a matter of fact, what is happening, shareholder might get a heart attack. Shareholder might get a heart attack. Suddenly the company which was consistent for the last 5 to 6 years, its earning per share has declined. Actually, if you see, earning per share has not declined because profits is same over the years. Then why it is happening? Because in case of stock dividend, we know total equity remains the same. Retained earning decreases and common stock increases. This is what the effect is all about. Dividend is given in form of shares. Since the base has increased, the number of a common stock has increased, that is why the earning per. So what we need to do for 2022, when we report BEPS for prior period, that is 2021, so we will show its effect. So for 2021, what was BEPS? Because when you present data for current year, you need to show data for previous year also, right? So when you are showing data for previous year, for prior period, that is for 2021, you consider its effect with respect to each prior period you are disclosing. So I will assume this 10,000 stock dividend was given in the last year. So again, the last year will be number of shares will be 20,000. So as a matter of fact, my earning per share will be 1. Now the investor can compare. Earlier it was 1.25. Now also it is 1.25. The company is performing consistently. Suddenly if investors see this, they will be out of their mind. So last year you cannot show the effect of stock dividend because it was declared in the current year. But current year mein when you show figures of prior period, you need to restate that. In India, we call it as restated BEPS. Now the investor can compare. No, it is same. The earnings have not declined. EPS has not declined. So this is must. Okay. So this is what it was written. If prior periods are presented, the effects of stock dividend must be retroactively adjusted for those periods. Right? Okay. So this was with respect to basic earning per share. So in the next session, we will be covering diluted earning per share. Okay. Bye.